Thank you for taking the time to tune into this webinar. This is something we've put together to help business owners around the country that seem to be coming to us with the same types of questions. So we're going to tell you the things that your accountant isn't telling you. So these are very, very common themes. And before we jump into that, of course, I'm Luke from Next Advisory. That is Phil on the screen that you'll see too. He's not here at the moment, but he's here in spirit. And we both run Next Advisory together and look after a range of different businesses across the country and help them grow and go on their journey and just build a solid relationship so that they have someone they can turn to learn and grow and to talk to. So let's get started because we've got a fair bit to get through, and the aim is that by the time you're through to the end of this webinar, you are going to have learned more from us in this 1 hour than you will have learned from your relationship with your accountant. So hopefully we'll teach you something, and I'll be very, very surprised if you don't. So let's dig straight in, and I'll talk you through most of what we've got here. So what your accountant isn't telling you. So this is the 5 key things that every business owner should know. Now, the business owners that do know these 5 things will be and are doing better than those business owners that do not know. So some of these things are about personal responsibility, and we'll touch on those as we get started. But for now, you're probably wondering, well, why is it that you're here? So the main reasons that we see people get into business are to have more time and to make more money. And really, these 2 things are expressions of freedom. People want to feel freer in their lives. Now, the 2 main problems that we see business owners that they have is that they don't have enough money for the work that they're actually doing. So they're not getting enough of a return from the work that they're putting in their business. Now, they also don't have enough time to do the things that they want to do. So people get caught out building a business that they never really wanted in the first place. This can happen when people try to be everything to everyone, and it's a dangerous cycle to be a part of. So what's it got to do with your accountant? Well, people often assume that their accountant is looking over their numbers every week. We hear it all the time. I started losing money and I can't believe my accountant didn't tell me, and things like this. Now, as I said before, personal responsibility is very important here because gone are the days of just purely relying on your accountant to solve everything for you. If you want to be a true business owner that is growing, you need to understand some of these things, and that is why we're here to talk you through them. So there's this other misconception that their accountant's going to sort everything out and sort the boring stuff out and just help the business owner improve their business, and that by having an accountant, they're going to learn all this stuff. And it doesn't end up happening. Now, the things that business owners want to learn about is making more money, having more time in the day, being happier in business, having some clarity around what they want to actually do with their business, and they don't want to be making a loss, or they don't want to be losing money or not having a profit. So that is as much as your responsibility as a business owner as it is your accountant. And if you purely rely on your accountant to make this happen for you, I can guarantee you that it will not happen. So let's look at some of the basics of what people expect from their accountant. One of the things that we often hear is that it can take up to 2 weeks for their accountant to get back to a business owner. We win a lot of work from other accounting firms where a miscommunication or just a lack of communication is a massive reason why people leave their accountant. So people want speedy responses, especially in this day and age. No tax surprises. People don't want to have surprises around the tax that they have to pay. They want to know what expenses they can and can't claim, and they want to be able to ask that and get an answer quickly. People want to know how to grow their business. Most business owners aren't in business to just have the same year as they did last year, but that is often what happens. So often we'll see a business that might have been going along for 7 years. They've had 7 years of the same year. So they don't have 7 years of business experience. They have 1 year times by 7. So, people want to be growing and they need to be learning from people, and their accountant isn't doing this for people in a lot of the cases that we see. Of course, responding to queries, like we said, and not having to wait weeks or get palmed off to a junior. And people want advice around large decisions that they're making in their business. They just want a second opinion as to whether they're on the right track. And often accountants can get caught sitting on the fence and not actually making a decision, which doesn't help the business owner figure out what it is they should or shouldn't do. So you're probably thinking, well, shouldn't this all be easy for an accountant? Now, I don't want to make excuses for our industry or even myself, because look, we're not perfect. And the accounting game has changed, and it's changed very, very quickly. And with the advent of accounting softwares and things like this, things are changing very, very rapidly, and it's making it hard for accountants to keep up with what is now happening. A long time ago, even when I first started in accounting 10 years ago, a lot of my role was just data entry, putting numbers into a software and then building reports and saying, hey, you've got X amount of tax to pay. Xero, MYOB, and the like, they have automated a lot of that, and it is making it hard for the accountant to figure out, where do I fit into this relationship with my client? Now, most accountants aren't actually business advisors, nor are they up to date with business trends. That might shock a lot of you, but if you're still stuck in the data entry way of thinking to make your money as an accountant, why are you going to get into business advice? Often accountants don't actually grow their own businesses very well either, and we'll get to that later on. So some people get stuck with accountants that don't actually have any true business advisory skills. Now, accountants also have hundreds of clients. That means that they can end up with capacity issues. Some have thousands. Some are creating a volume model, and that is at the bottom there. A lot of accountants are competing on price. So they're trying to give to the market a cheap service and then rinse and repeat it and do it hundreds, if not thousands of times to make a dollar. They are not going to want to speak to you if that is their model. Why would they want to speak to you when you're going to slow them down from adding another client so that they can compete with another accountant on price and make more money for themselves? So you need to be thinking about these when you are selecting your accountant, what sort of relationship you want to have. Now, there's also a perception from the market that your accounting software does everything. So why do I even need an accountant? Or, don't they just click a few buttons and then everything's done? I do everything for them as well. Accountants are very, very bad, myself included, at actually explaining to clients what we're doing in the background to make sure that you are staying up to date with all your requirements, all your record keeping requirements with the IRD and the likes that want to come and have a look if they should have a look. Now, often a lot of this work is only important if the IRD are to pull your name out of the hat and have a look at some of this stuff. So, you may think, well, surely the accountant's just running off a report and now they're charging me thousands of dollars, but there's always things that they're doing in the background that you probably don't know about. Now, as we said before, most accountants have limited modern day business experience, and we'll get into that and give you some examples of that later, because as well as I, especially if you're tuning into a webinar, that the world is changing so quickly, and that is no different for the business environment. Right, let's get into some of these things then that your accountant should be telling you but isn't telling you. Number one, how to use your accounting software. Now, this is an absolute no-brainer. Xero, MYOB have built these amazing technologies, yet most business owners only know how to use 10% of that software. They'll say, yeah, I reconcile my transactions. I can go in and code it all, and I put it to entertainment and this one to travel. That is not enough. You are doing some of the data entry and telling the machine where that is supposed to go. You need to be getting more out of your accounting software, like understanding your financial reports. And you will say, well, I don't want to read those things. I don't get them. Tough luck. You need to understand these things to get better at business. Now, there is a stat floating around, which we don't know if it's completely accurate or not, but 95% of people don't read their financial statements. Well, the accounting industry was very quick to think with these new technologies, oh, great, we can now give our clients these reports faster. Let's send them 3, 4, 12 a year. People don't read them, but you're still paying for them. So our industry broke what was already broken and made it worse and times it by 4 and by 12. Here's another report. Have this one. Check this one out. You don't know what you're reading. So why would you sell people those? But anyway, that is what we've done. Now, 87% of people are said to be financially illiterate. It means, again, you still don't actually know what you are looking at when you get these reports. So what value is it to give someone a report that they don't understand? Now, that's where you need to work with your accountant to actually upskill and learn about these things that are in your reports and figure out how they can help you, because there are some key things to learn that are actually very, very simple that will make you a better business owner. So we'll get into some of those a bit later as well. But you might even want to be figuring out what is your break-even point. So if you're creating a good, you're trying to figure out, right, what is it costing me to make this good? And therefore, if I sell it for that price, I'm just breaking even. So if it costs you $50 to make and you're selling it for $50, you're just breaking even. You're not actually making any profit. So that's where you need to understand margin and markup and how those things work. And we create videos for clients and non-clients as well on how this stuff works, because it is so important. And we see so many people come to us and say, oh, I've started selling my honey into Faro. And we say, oh, great, what's your markup? What's your margin? What's your profit you're making? And they've got no idea. They're like, oh, well, it's in Faro, so I'm doing pretty well. Well, are you? What's the point? You're probably doing Faro's job for them. You're giving them another product that they can sell and make their margin. You're not even making $1. So very, very interesting how people come to these conclusions but don't want to understand the financial side of it. Some people go for years not making any profit because they don't understand the stuff, and they get to the end of 2 or 3 years and go, well, I'm a bit sick of this because I don't feel like I've made any progress. Well, you didn't start with any profit or margin or markup focus at the start. So these things are critical to actually learn, and it doesn't matter what industry you're in. You need to understand whether you're making a profit, because you can reinvest that profit back into your business to do more. So understanding a bottom-up analysis is a great way to actually target a profit and then figure out what you need to sell to be able to make that make that profit. And that is what we do with a number of our clients. We make them set a profit that they want to make for the next year and figure out whether that's going to keep them happy and keep them engaged and keep them motivated, and go, right, well, let's work backwards. What's it going to cost to make that? Therefore, what do we need to sell? So it's a very, very worthwhile episode and exercise to go through. So, if you're not doing those types of things, then you're probably wondering, well, wow, what am I doing? And, before we go on to the next slide, even just having a methodology for dealing with the bank, we see so many business owners that will just roll into the bank and say, hey, I want to borrow some money. And they say, oh, hand over these reports, or what have you been doing here? And they're not actually prepped and ready to go to the bank before they go there. So you need to be careful of those types of things and actually keeping your accounts and financial information in good order if you are planning on handing those over to somebody else. Now, this is a real P&L, a profit and loss, up on the slide here. And the reason we've put this in here is because it's to show you some of these things in real practical sense. So if you can see on the very far right there, our net profit in the bottom right corner is $50,000. So this business is making $50,000 for the year to date. Now, those figures to the left are all month to month. But even if you just understand your year to date net profit via your profit and loss, which you can run out of your accounting software, you're going to be a step ahead of so many other business owners, because they're not looking at these reports. So therefore, if you're looking at that, you can go, well, I thought I was making more money than that, or I didn't think I was making that much. But at the moment, how do you measure how much you're making? Is it just what's in the bank account? Because that's often different to what is sitting on your profit and loss statement. So your profit and loss statement is there to show you the total income you've had and the total costs that you've had to create that income, and therefore your profit you've got left over and what you'll end up getting taxed on. So without getting too complicated with that, that is a very good report that you should be running for yourself, probably weekly, if you're not at least doing it monthly. So, please set a calendar reminder for yourself to start trying to find some of this information and go, right, at the end of the month, I want to be looking at my profit and loss. I want to be seeing, what did we do in sales? What cost did we have? What profit did we have left over? Because these things are important to know. Now, we'll demonstrate some other examples throughout this, but you might have a look there at sales in the second to left column for $10,000. Now, this is also where people don't understand how accounting works. So that $10,000 invoice might have been sent out, but it may not have been paid. Now, that $10,000 in sales is adding to your total sales for the year and also your profit. So that is where people confuse profit versus cash, because the cash hasn't actually been received by the debtor or the accounts receivable, the person that owes you the money yet you are recording that income into your profit and loss statement. So having these types of skills to understand how that stuff works can really help you in the long term trying to figure out how to play the game of business. So if you learn nothing else from this, please figure out a way to get your profit and loss statement out so that you can go and study that and figure out, right, how am I going? Now, how the hell do you even read it? So look, you can have a look online at different tutorials of how to read that profit and loss statement if you want to get deeper. But of course, you could check in with your accountant. You're probably going to get charged for it. But make a note to understand this. Now, you should be able to right now, as we have live data, be able to answer the question, what is your profit, year to date right now? Just like we saw on the slide before, you should be able to answer that. And how much money do you have available to spend? That is different to how much money do you have in your bank account, is how much money do you have available to spend? Because, that is the money that you can use to carry on paying the bills of your business and to grow it. Now, that is why we like our clients to have a simple cash flow projection tool. And we'll show you one of those in a second, but you want to be able to see what your money incoming and outgoing looks like over periods of time, whether that be weeks, months, or years, so that you can figure out when's money coming into the business, when's it going out, are we going to have a shortfall, how are we going to fix that shortfall, if we buy that new vehicle, can we pay cash for it, can we go and finance it so that we put the money back into the business via a loan, what do those loan payments look like going out each month. Those are the things that you need to understand, and having a cash flow is a great way to understand exactly that. Now, identifying your key metrics. Every business has different metrics, the things that they should be measuring to understand whether their business is tracking in the right direction. For some, this might be profit margins, so making sure that you're creating your goods at a consistent margin and with a good profit level in there. Some others, it might just be sales, or it might be new customers that you're adding on. It really depends on the goals that you are trying to achieve. We've spoken about understanding the cash versus profit, and that is an entire topic on itself, but something that you need to figure out. Now, accounts receivable, exactly what we said before about invoicing out, which records the income, but you may not have actually received the money yet. So your profit and sales are going up, but you don't have the money in your bank. Now, this can become a very big problem when you have large levels of debtors. So people that owe you money, which you're therefore recording profit and sales for, which you then get taxed on, but you don't actually have the money. So that is where you need to think about what the terms of your business are. Gone are the days of charging people at the end of the month and saying, pay me in 20 days or 30 days from invoice. All these stupid things that were done years ago, people are still copying because their mate down the road does it, or they saw another business do it. You are your own business. You set your own terms. We are so big on this because it can dramatically change how quickly money goes through a business. Now, you can't pay your bills with accounts receivable. You can't pay your bills with revenue. You can only pay them with cash that you've collected from your accounts receivable, which is generated from your revenue. So the faster you can get that money in, the faster you can pay your bills, feel more confident, get things out of the way, and start to make decisions for the future. If you're constantly chasing money that hasn't been paid to you because you didn't take a deposit up front, or you've financed 6 weeks of your staff wages and you're still waiting for your debtor to pay you for the work you've already done, you are acting like a bank, and you are starting to freak out about, wow, what's going to happen if we don't get paid this? So, just addressing your terms of your business can be a huge change and change the complete direction of your business. So write that one down too. What are my terms? What am I doing here? How did I set these up? Are these best practice terms? Google whether your terms are the same as a different type of engineering business or whatever it is that you're doing, so you can see, well, maybe could I do this differently? And check in with a smart advisor about making those the best for you. Now, separating your accounts out for tax and rainy day funds. This is something that we do with clients that they love because it makes things a lot simpler. So we'll talk about this shortly as well, but having an A and a B account can make things a lot easier when it comes to figuring out your tax. So just having one pool of money and you're logging into your internet banking, you're thinking, oh, sweet, we've got 118 grand sitting there, but part of that's GST, part of that's tax, part of that's creditors to be paid. Those types of things are all sitting in that 118, and your actual amount of money you have available to spend may only be $23,000. So that is why separating money into different baskets can be very, very good for the brain. Right, here's an example of a cash flow that we lend out to clients basically and say, hey, have a crack at this yourself. And some of them do it well, and others sort of, need some help along the way, but there is some training information that we've provided with this too. So if you do want one of these, we can send you one. I'd highly rate keeping one of these active at all times throughout your year. And it's basically tracking what's coming in, what's going out, therefore what your bank account balance is going to be. And you can start to see down the bottom there what your closing bank balance is going to be and if you're going to end up in a negative position. Number two, the importance of having a plan. Now, this is something that we're huge on because this is the bulk of the work that we do with our clients. Now, most businesses don't actually have a plan, even though it sounds so simple. They might have a plan in their head, but they don't actually have it written down, nor get brave enough to tell people what it is, and they're sitting on it themselves and not communicating it with the people around them. Now, if you fail to prepare to fail. We've all heard that before, but realistically, if you don't have a plan, you are actually planning. You're planning to fail. That is your plan. So our clients who work to a plan outperform their competitors and other businesses who just drift along, having the same year of business as they did the year before, complaining about how they, only made an extra $1,000, or they didn't get to go on holiday this year because, when they planned to, someone got sick and it meant they had to cover them. They don't have solid plans. So get a plan in place. And, firstly, you need to figure out what sort of life and business you actually want to have. And that can be confronting for some people because it's hard to, verbalize some of those things, but we all know them deep down. It's just sitting down and getting a little bit vulnerable and figuring out what sort of life you actually want, because that's going back to the start, probably why you got into business in the first place. So we do this every year and we love it. As you can see, a couple of nice Fiji bidders there when we went over to Fiji and did this, when we built out Next Advisory from the start. We were very clear on the business that we wanted to have, and we knew that we had to plan, well, how the hell were we going to do it? Well, tax-deductible trip to Fiji was going to be a great start in our eyes, as a couple of accountants that are always chasing the great way to, make a few expenses deductible. But the work that we did there has paid dividends for years to come for the Next Advisory that we're now building. So, it's a great time building a plan to be working on your business and getting some clarity and direction around what exactly it is that you want to be doing. And even having some accountability from someone independent to yourself, your spouse, or your friends, that type of thing. Accountability is so good for humans. Now, also, of course, you're going to be taking some time to figure out, well, how can we outsmart our entire market? A lot of people are just copying what their competitors are doing and think, oh, we better do that because they're doing that. Now, that shouldn't be your goal. Your goal should be to absolutely smash them out of the park and have them coming to you saying, why are you doing that? Doing it behind your back. You want to be absolutely dominating your market. And of course, achieving more than you even thought possible. And that's exactly what Phil and I are doing there. We're scheming up, how can we really change the mold of the accounting industry and do the work we want to be doing? And we blur the lines so often between, are we accountants or are we actually, almost personal coaches and business coaches? And that's exactly what we're doing. We're providing life-changing advice to aspirational business owners, and we love doing that. The problem with our industry is people don't think that accountants do that. So we've got a shitload of work to do to try and convince people that we do. And as you'll see with some of the clients that we have later on in this, that's exactly what we've been able to do. But it wouldn't have happened if we didn't sit down and plan to do exactly that, believe in it and work on it together, and then have people hold us accountable. So how does a plan actually work? Well, a plan's an important piece of work to direct actions toward desired outcomes and results. It helps you set objectives and achieve your ultimate goals, just as I spoke about with Phil and myself. It helps you define the full scope of a project or years of work. It provides focus, gets everyone on the same page, and sets deadlines for you to measure to figure out whether you're successful or not. And that allows you to review the entire project or a time frame rather than just getting a year ahead and thinking, well, we didn't have anything to compare this against, so did we fail? Well, who knows? So you want to be doing these things so you can actually measure backwards against what you plan to do. Therefore, did you execute? Now, we give clients and even potential clients this 12-month business planning blueprint that we use with them that goes through everything from your business's purpose right down through to the numbers, the strengths, the weaknesses, the biggest roadblocks, your values, and those types of things that you want to start using with people that are going to come to work for you, or people that are asking you questions about your business, saying, what do you value? And you can tell them, bang, straight off the top of your head, winning, execution, translator, genuineness. Those types of things are the things that you believe in as a business. And they don't just go up on the wall and everyone goes, oh, cool. These are real things, and you want to make sure that people really buy into them. And you're sharing this plan with people that are important to your business. And of course, off the back of that, you're building a 90-day action plan every quarter to figure out, well, how are we going to get there to achieve these results and these goals? We need to take actions. So that is the second half of that worksheet there. Now, clients do that with us in person throughout the year, and it's a lot of fun, and they have huge results. Now, that's over a 12-month period when people are doing it in person with us, and it's a half-day session plus some pre-work and some study from our end as well of them, that business and their competitors and their environment, and also where we think that industry is heading. There's quarterly meetings to review the progress and provide some accountability to the business owner. We give access to our entire network, so we introduce people, business owners, to the people that we think are going to be able to help that business owner's problems. That might just be in tech or automation or some marketing, Facebook marketing or AdWords, whatever it is, and of course HR, because that's not an easy area either. So we have monthly calls with our clients to figure out, right, how's everyone going? What are they working on? Do they have any problems? And they get to interact online with other clients that are on the same journey. And we put on a couple of live events over the years, and they've been really, really popular around goal setting and planning and breaking barriers as well, and working to your strengths. So we'll look to do those in the future as well, because people get a lot out of them. So this type of work is going to help you refine your business and focus on what actually works for your business, and not just doing everything because someone down the road is doing that. And ultimately, you want to be making more money from the work that you're doing so that you can spend more time doing the things that you want to be doing. Number 3, how the hell does tax work? Oh, I'll take a deep breath for this one. There's a lot of confusing info on tax out there, right? And business owners don't want to understand this stuff, and we get that, but you have to get to a point where you start to at least have an 80% understanding of the full picture. And we do podcasts and videos and training courses with our clients to help them understand how it works, because going back to those profit levels before, if you've got a $50,000 profit sitting there, you should know, right, what sort of tax should I have aside, and have I been putting some money into my separate tax account to stay on top of that? Now, I'll just give you a couple of examples of the things that we do with our clients and we see people really getting it wrong. And one is that provisional tax is based on the prior financial year. So a lot of people think when they get told by their accountant, hey, you've got to pay 10 grand in tax, that's the entire amount of tax that they've got to pay, or that's going to keep them up to date. That's often not the case, because that $10,000 might be based on an entire financial year prior. You might have had a bigger financial year, or you might have even had a smaller financial year. So because it's not based on that current financial year, you're not actually paying an accurate level of tax. And that is where people end up with big tax surprises down the road, where they're actually playing catch up because they've only paid tax based on 2019, and actually 2020 was a lot bigger, and so on and so forth. So we encourage our clients to have a separate tax account, which we call a tax account, but I'll call it a B account for the purposes of this webinar. So your A account will be where your customers pay you and where you build up your income. And each time you're getting paid, or each month, you're starting to put a portion of your profit over into that tax account, as well as your GST. Now, when you come to pay your GST, you use your B account to pay that GST. And that means that as you go, you're constantly putting GST aside from the invoices that you're collecting. Now, that means that in your A account, you are left with the money that's technically the business's to be able to spend, give or take a few things that can happen. But what it means is that you're getting in the habit of staying on top of your taxes, and it keeps it very, very simple. Now, some clients go into A, B, C, D, E, F accounts, but that is an A and B is a very easy way to keep it very, very simple and keep yourself looking at just the money that's available to the business when you are logging into your internet banking, instead of getting carried away of seeing extra money and thinking, right, I'm going to go spend all of this, or doing some of the silly things that we see people doing over the years. So we help our clients understand what tax they have to pay and when they have to pay it, because most clients are paying tax 3 times throughout the year as provisional tax. So we're actually calculating their tax throughout the year based on the current year, not the previous year. So we're saying, hey, the IRD want you to pay X, we should suggest that you pay Y. And I note that you've been following our system and you have Z amount over in your tax account. We would suggest paying an extra amount to keep up with your current profit level. So that's ideally how it ends up working when we're reviewing people's tax levels. Now, there's something called tax pooling that you may or may not know about. And to keep it very, very simple for you, what it means is that you can basically delay when it is that you can pay tax by paying a little bit of finance to a tax pooling company. And you can use that if you've been late to pay tax, or if you need a bit more time to pay it, and you're not going to pay late payment penalties to the IRD who are thinking, well, you haven't paid this on time. So Michelle's birthday is, of course, tomorrow, if anybody's interested in that. Hopefully Michelle's watching. But that is a tool that you can use for your business that really can help you save some time and save some money if you do get caught out where you're not paying your tax when you should be. So, keep that in mind, because you may end up needing to use that at some stage. Right, we look into what you can and can't claim. Now, this is obviously one of a business owner's favorite questions. Can we claim this when they buy anything? It might be a new speaker, it might be AirPods, it might be stationery, it might be things that are blurring the lines of the tax laws. But an accountant's there to help you to figure out what you can and can't claim. So dig into them and find out those types of things, because the tax rules are actually there to encourage business owners and businesses to actually do their business, and that's why expenses are deductible. Now, a lot of people think, well, you've got to pay tax because it's just what they suggest you do, but the reason that expenses are deductible is that the government are trying to encourage people to perform those services. So for us, for instance, it's to perform business advisory services and making it advantageous for us to do that by claiming some of our expenses, because they know that we can probably do a better job of it, or we can do a better job of it than the government, and we can do that work that they can't do. So it's not bad to be claiming expenses. It's there to encourage you to stay in that market and keep doing great work. Now, of course, things like motor vehicles, entertainment, training, staff training, lunches, meetings, in your home office, those are the things that come up all the time, and those are great things to be thinking about to ensure that you are claiming the things that you should and can claim. So, always ask the question, can I claim this? Because an accountant is there to help you figure out whether you can or if you can't, and that's how you learn as you go. And don't just trust old mate down the road at the pub who does his and claims his golf subscription and his golf balls and stuff and buys a new pool for the house and puts it to purchases when he's got a building business and stuff. Check with someone smart, because you don't want to get into trouble for doing things that you shouldn't be doing by taking the advice of people that are undereducated and perhaps not on the same moral compass that you have set. Now, every accountant has different interpretations of this law as well, so be advised that if you move from one accountant to the other, you often get completely different advice. Now, this isn't making one right and one wrong. It is just their interpretation of how things work and their risk barometer coming into play as well. Number 4, ways to grow your business. Now, this is a lot of the work that we do tied in with the planning work that we do. And, there's a lot of work to do. And sometimes you don't know where to start as a business owner. And you don't know who to turn to and how you should go about this. Well, I'm going to be honest. Sometimes accountants don't either. And you probably think, well, if you're in the camp of thinking, well, yeah, that's fine because accountants don't do that sort of work, perhaps you're right if you've got that type of accountant. But some of these accountants will say they can help you, but they may not actually know where to start for you. So here are some of the things for you to be thinking about. What problems does your business solve? Now, this should always be your ultimate question to be asking yourself. If you're adding a new product into the market, or if you're building out a business, you're asking yourself, what am I actually solving for the market here? Because business is realistically just problem solving. What is the most profitable work you do? Often we see clients or business owners that come to us, they add in a new product or service, but it's not actually making a profit, as we've talked about here. So we get them to focus on the work that they are actually making the most profit from. Now, they might want to still do some of the other work because it adds fulfillment to them, or they like doing it, or it leads into the profitable work. That's, of course, another conversation. But, just looking at the work that is most profitable for you, you should be able to identify what that is and how potentially you can do more of that. Of course, we've spoken about how what do you want your business to look like? You actually have to know, what is this business that you want to build? And what's stopping you from building this ideal business? And the old question, what did you get into business for in the first place? Now, this can be quite intimidating and quite a light bulb moment for some clients we work with, because they think, well, I'd completely forgotten. This is why I got into business, and now I'm not even doing that anymore. So a very good grounding question to make you think, why did you get into business in the first place? So also, who do you need to know? Is there anyone out there you can think of that could help you achieve your desired results? Because it's often very simple just to give them a message and say, hey, can you help me with this? Or, hey, I've seen you doing this. Could you explain how I'd go about it? And people love talking about themselves, so don't be shy to reach out to those people that have achieved success and say, hey, could you point me in the right direction with this? And hey, if you have to spend a bit of money, well, suck up and do it. You're going to get a return back from that. So many people are out there just putting their hand out and hoping for a freebie or the silver bullet. And we can assure you that it doesn't work like that. And the more you actually are willing to invest in yourself and your business, the higher returns that you get back for yourself and from your business as well. And of course, who is your ideal client and how the hell do you find them? That is what you should always be looking to do, is try and find those ideal clients, because you like working with them. You might be generating, profit levels that you are really targeting. And those things are going to help you have a better business. And also surrounding yourself with people to challenge you and help you grow. That is very, very important, because we can often get sucked into doing quite well and thinking, well, I'm just going to hang around these people that praise me and say I'm doing really well. And really, you may need someone else to come and say, well, how about X? How about Y? How about Z? You know, what are you doing next? What's next? You know, what are you doing about this? So stay challenged. It's very, very good for you. Now, some very, very basic examples, because those ones are quite grunty and quite, for some people, they might find them fluffy, would probably the word Phil would use. But let's look at some real basic examples. You know, first ask yourself, is less more? Like we said before, are you doing things you don't actually need to be doing? Can you get rid of some of that stuff? And of course, can you increase your prices? Now, what I mean by this, here's an example for less is more. You know, if you took your price and say it was $100 and you doubled it to $200 and you lost half of your current clients or customers, you would still have the same amount of revenue. That's a very extreme example, but trust me, people have done this, and maybe not to the extreme of doubling, but they have done it to get rid of the customers and the clients that they don't want by simply increasing their prices. I'm not suggesting you go and do that, but think about it. Is less perhaps more for your business? And can you increase your customer numbers? You know, this is a no-brainer. This is the thing that everyone tries to do. I need to get more customers, you know, I need to get more clients. That'll help me make more money. Well, maybe it's about price. You know, it's not just about customer numbers, but if you're there ready to grow and you've got capacity to look after new customers, well, hey, have a crack at it. But of course, you can always identify choke points. And now what we mean by those are things that are slowing the business down. It might be getting stuck in the email inbox. You know, it might be a breakdown in the manufacturing plant. It's things that are stopping the boat moving faster. Now, you want to try and swap repetition areas with tech and automation. And if you're answering the same question 10 times, can't you, you know, build a copy and paste to that, or build a video that's going to explain to people, here's how you do this. You know, you need to be looking at these things that can help you save time. Increasing your sales. Now, of course, there's a number of different ways to do these. And of course, e-commerce was a great way that we saw a number of businesses add on extra sales over the years as they've added an online store, and on that bumping up their profit margin. So they might get a customer to the store and they might sell them good A. And when they do that, they then say, hey, would you like product B as well for, you know, an extra $10? And hey, product C, we're going to send it out to you right now. And people will often click one click and add these things to bundle on extra margin. So you've already done the hard work to get there and sell them as a client. Can you add some extra margin on? Now, that is something that we should all be practicing to try and put more margin into our businesses that goes straight to our bottom line and makes them more profitable. Now, analyze your spending. Going back to that profit and loss earlier in the slides, you know, you want to have a look at the things that you're spending your money on and figure out, are there things that I don't necessarily need to be spending as much money on anymore? Could I move from a $10,000 a year to a monthly subscription to smooth out my cash flow, or could I pay it up front, vice versa, those types of things? Or do I actually need this thing that I've been paying for the last 5 years anymore? So subscriptions are a great way for people to make things look cheaper, but often as business owners, we tick up about 10 of them and then look at our profit and loss and go, wow, I'm spending $3.5 grand, $6 grand a month on all these different things that it's taking me to run my business. So keep an eye on that. It's just one thing to take an eye at. Look at when you are looking at your expenses. So going back to growing, ask your current customers for referrals. Now, this is something that we're quite bad at in New Zealand, because we think, oh, I don't want to have to ask people, and I feel salesy and I feel bad for asking. But your clients and customers, they already love you, especially the ones that love you. And we'll look at 80-20 later, but those ones that really, really enjoy what you do for them, ask them to do reviews, or say, do you have any mates that are in a similar business or that you think we could help, would really love to help other people as well. So think about those and think about building a system to actually generate referrals. And it's something that real salesy type businesses actually do really well. They're thinking, right, ask for referrals. Who else is in the same boat? As you know, smaller business owners, we think, oh, I don't know if I want to do that. I feel a bit bad. So you know, break that myth. It's not good for you, and it's not going to serve you well going forward. Now, time and money. Time versus money, highlighted orange there. That is, you get to a point in your business where you start to figure out, right, you know, is it worth me investing my time to do this, or should I pay the money so that I don't need to do it? Excuse me, touching the 40-minute mark here. So, you know, what things can you potentially buy your time back with? That might even be simple things. Stop going to the supermarket, buy your groceries online. You know, don't walk down for lunch and get caught out for an hour. Order the food to Uber Eats if you're in a focus mode, and eat it and save, 45 minutes. You know, these little things, they might not sound major, but those are two very practical, easy examples that aren't even business focused, that can put hours and hours of time back into your life over a month and over a year. And what you can do with that time is build a better business and build a more, rewarding and sustainable feeling of how you use your time. So think about those types of things. Think about where you're wasting heaps of your time and how you can potentially use money to get some of that time back, because it's becoming valuable enough for you to now do that. Often hard in early days of business, but great once you start to really get some traction with your business. Now, again, who are you surrounding yourself with to challenge you and help you grow? Those things for you, if you weren't just thinking about those, who are you putting in your ears to make you think like that? It doesn't have to be us, it doesn't even have to be Kiwis. It could be anyone offshore, but, start thinking about these things that are really going to help you, because we love to see Kiwi businesses doing better and adding more to the economy. That's what we should all be here doing, is providing a result and a problem-solving method to our marketplaces so that they can have better lives, and also we can in return for doing that work. Now, I want to give you some practical examples of things that we've done, because it's easy for me to sit here on this webinar and talk to the screen for an hour and say, do this, do that, or think about this. But, we are actually out here growing as well. And a lot of our clients and different businesses will come to us and go, does that work? We've got 54 episodes at the moment at the time of recording this in our podcast, and we've picked up clients from that, and we see other accountants copying us and think, oh, we better do that because they're doing that. You need to be very, very careful what you copy off of other people, and go and get advice from people that have gone and done it. Don't just watch what they do and think, oh, I'm going to copy it. Try and get some of their understanding as to why they've done that. For us, this podcast really lives into us being able to provide, advice at scale to even non-clients. It's going to help them, and they might come in 3 to 5 years' time and say, you guys changed my business. I'd like to work with you, or I'd like to introduce you to this person. And we also love doing it in content's one of our strategies. Now, on the left there, Phil and I, that's one of probably over 1,000 videos that we've now recorded. Now, most accountants wouldn't get in front of the camera because they don't think they need to, and they probably don't. And so do we? Well, sometimes we do it and we don't actually need to do it. But the reason we do it is because we want to build the fact that, we're very personable, and we actually have personality, and we're not just boring, brown suit wearing, abacus loving accountants, because people aren't going to relate to that, or they're not going to relate to that if they come and meet us, because we want to be out there and be genuine and being ourselves, because that's what we find rewarding. So video for us has been huge. And on the right there, we've spent over $40,000 in this one ad account for Next Advisory on Facebook ads. Now, the average spend for an accountant for a small firm the size of ours across Australia and New Zealand is $1,000 a year. Now, we're into year 4 and 5, and we've spent over $40,000 on this ad account, and we've also got other ad accounts where we've spent the same, if not more, money as well. So that's not a huge amount, it's been very well worth it for us, but it is a huge amount compared to our industry. But I'm not bragging that, look at the money we've spent. The point is that, our clients can come to us and say, hey, do Facebook ads work? We're not accountants that go, no, it doesn't work. God, know nothing about it. But no, I wouldn't do that. You should do this instead. We're trying stuff out in the marketplace as well, which puts us at a massive unfair advantage to be able to help other business owners, because we're actually doing it. Now, going back to what I said before about how a lot of business accountants aren't actually business advisors, nor are they up to the date with trends of what's happening in business. Now, we can't just say that about other accountants and not go out and do it ourselves. And back on the left there, myself with a certificate from the Chartered Accounting Institute to reward some of the work that I've been doing for, the things that Phil and I are doing. And unfortunately, Phil wasn't, there was a younger regional advocate award, and Phil had just gone past the threshold, let's say, for that award. So I was lucky enough to pick that up. But, we're actually out here trying to grow ourselves and trying to grow those people that are around us. So we're not just talking shit. I'm going to say that because that, is what we see a number of people doing that don't actually have skin in the game, nor actually having a crack at some of these things. So again, that allows us to then sell back effectively some of the lessons that we've learned over the years from the things that we've done, and turn those into business advisory sessions and help our clients grow faster, because we've already been there and done it with some of these things. Or we can go find people that have done similar things, whether that be our clients or the people in our network. Now, is there something wrong with your business? This is just a very quick diagnosis of things that we often see with different clients and different businesses out there that come to us. So they keep adding more and more to their business as it grows, and that's very normal. but they get to a point where they just think, man, do I want to be doing all this stuff anymore? Is it actually helping me? So you get pulled in different directions every day. You haven't got the time to build the systems that are actually going to save you time, but that's exactly what it is that you need to do. You can't afford to invest in your business to make more money, but realistically, you can't afford not to. You become a slave to 100 tasks a day, and you've got to do them day in, day out, and they stop you from doing anything like working on the business. You don't know whether you're profitable or not, or whether you can actually spend the money you've got in the bank account. Your business isn't providing you what you want it to provide you. You start to fall out of love with your business, and the people around you start to suffer because you're acting differently. This affects your results in your business and other areas of your life, so you need to be careful of the stuff. Now, remember, less is more, and think about the things that you're good at. Can you focus on those more? We've got a huge culture in New Zealand of trying to fix your weaknesses and play by improving those. Well, how about focusing on your strengths and think, what do people really like about my business, and can we do more of that? And is that going to serve us more in the future? And I guarantee you it will if you work to your strengths. So have a think about those things that you're good at. This is the 80-20 rule that I mentioned earlier. Very quick exercise for you. It's a principle that's been around for decades, and it's that 20% of your effort will lead to 80% of your results, and 80% of your effort will lead to 20% of your results. So have a think about it. There's probably one type of customer that causes 80% of the issues. 20%, of your revenue is probably coming from 80% of your customers, and vice versa, 80% potentially from a 20%. So, or a type of work that you're doing in your business. So think about your customers, your costs, the things that are slowing you down, the things that are your pain points, and go and solve those little pieces that are creating 80% of the trouble. It's just going back to 20% of the things that are creating it. So have a think about that, and go over that slide a couple of times, and Google that principle, the Pareto principle. I may have got the pronunciation wrong there, but very, very powerful concept to get your head around. Now, number 5, what to do with money, the last one. Technically, this isn't actually an accountant's area. So people will say, hey, I've got 100 grand spare now. What do you think I should do with it? Well, this isn't actually an advice area that accountants should or will be playing in, because it's not actually what we've sort of been trained to do. Now, we do have higher financial literacy skills. Well, hopefully we do. Some don't. But, this probably isn't an area where an accountant's wanting to dig too deep into, but your accountant will help you with these types of decisions, whether they're buying your assets using business cash or finance those assets, ways to get more cash into the business, introductions to smart people when it comes to money, so it might be approved financial advisors or mortgage brokers, those types of things. And of course, getting off the fence and helping you actually make these decisions, not just saying, oh, you could do this, you could do that, or how about these other things. You want to actually know, right, get off the fence, mate, help me here. And of course, decision making when you need an objective opinion. But don't expect an accountant to give you too much financial advice around what you should be doing with your money. They might have an opinion, which is fine, but it's not really their area. Now, personal finances, again, this is something that we see as an accountant not really playing in, but personal finances do become the output of the work that you're doing in your business. Excuse me. So I want to give you a couple of examples, because it's things that we see over time. And it's that businesses start to perform a lot better, and they really start to grow and get some traction. And all of a sudden, the business owner's like, right, I'm loving this now, and I've got more money. And the business is building it, and then it ends up with the business owner, and then that ends up with, I'm going to say it, dumb shit. So people buying dumb stuff that they don't actually need because they've finally got the money. So, you want to be setting some personal budgets as well around how much money does your household lifestyle actually require, and how can we live within our means? Because if your business starts to blow up and you haven't been experienced with having large amounts of money, there's a high chance that you'll just go and rinse that money through a different area, being your personal part of your life. So think about life creep when your business starts to improve, buying new toys and different things that you may not actually need. So think about your life as a business as well, and that's something that people aren't taught very well how to do. Building a rainy day fund, this is great for a business and for personal, building up a fund that gives you the confidence of, okay, I'm going to say it again, if the shit hits the fan, we can actually cope here, and we can make it through. So something for you to think about too is, are you thinking about your staff financial literacy? Because money causes a huge stress, and if your staff are stressed, they're bringing this to work as well. So I think this is going to be an area where it gets put back on the employer again to say, hey, it was physical health, then it was mental health, and now it will be financial health as well of people, because it's the thing that we don't like talking about in New Zealand, because it's hard and no one has all the answers. But as these things like KiwiSaver get even bigger, there's going to be a more of an understanding and a responsibility placed on the employer to help their employees. So start thinking about how you can potentially help your own staff and your employees to live better financial lives that are creating less stress for them, because they'll become more productive employees for you. Now, I bet an accountant hasn't told you that before. Right, do we have any customers? I'm going to skip through these because by now, you think I probably wouldn't be doing a 50-minute webinar if we didn't. So give us a Google and have a look at some of the things that people say about us to make sure that we're real. And if you're not convinced, then hey, Google one of these and put Next Advisory next to it too, because we do get asked to provide commentary when different things are happening in the environment. And you think, well, this guy looks pretty young. Well, I got told that a number of years ago too, but we're actually out here getting asked by these types of people to contribute to some of the news and different opinions that they're putting out there as well. So hopefully, that has been very, very rewarding and insightful for you. If you're still tuned in at this stage, then I'm sure, I can guarantee you that you've learned something there. So from here, look, there's two options, one or two. One, you can go at this alone and stay where you are now and just keep drifting, and it's going to be slower for you. You're going to make mistakes. It's going to be expensive, probably painful, and you're going to have to figure it out for yourself. We would love to have you come and join us, or even just explore whether we're the right fit for you and how we could help you. And of course, if we do that together, it's going to be faster. You're going to make less mistakes. It's going to be cheaper. We're going to have a bit of fun along the way. You're going to get to meet our team, our network, and learn from our lessons and join some of these other great clients like you're seeing on the right here. And we have got a number of amazing businesses doing cool things out in the marketplace. So, we would love to have you on a call for a conversation to figure out whether we are the right fit to help you go through the next year of business. And if we're to do that, it's very, very easy to change accountants. And people think it's really hard and that it's, near on impossible and all these types of things, but it is very, very simple in this day and age. And we write to your previous accountant. You can let them know as a courtesy if you want, and we basically get into your Xero or your MYOB and we rip straight in. So, it's very, very simple. We have monthly fees. We're transparent with our fees. So we quote everything before we end up starting the work. You deal directly with myself or Phil. You don't just meet us once and get palmed off to a junior like most of the other accounting firms. We've got speedy communication. We do the tax planning throughout the year, like we mentioned. We've actually got ways to help you grow and improve your business. There's the options to do monthly and 12-monthly business planning with us, with accountability and planning realignment throughout the year as well. We're more than happy to introduce you to people, in our network that can help you achieve your success faster. We do monthly calls with our client base so that they can tune in and ask questions that they need to and meet other clients and find out whether they can link up and do any work together. And we are here to provide life-changing advice for aspirational business owners. That is our why. That is why we love building Next Advisory and love doing what we're doing. Now, is this you? Because this isn't for everyone. And if you are going to book a time to have a chat, we can have a look at your current situation, provide ways to improve your business, see if our methodology will work for you. But I'll tell you who this isn't for. Non-established businesses, side hustles, just getting started, that type of thing. We're a bit past that with this type of work. So this is for established businesses. You have to have been in business for over 2 years in the market, with a proven product or service that adds value to the marketplace, and you actually want a relationship with your accountant. If we're sending you emails or calling you or even texting you, we need to be getting a response. There's nothing worse than a relationship where it's only going one way, and that is more than just in the accounting game. So if you want to have a better business and invest in yourself, we'd love to build a relationship with you, and we love people who take action. We don't like just talkers. I've just spoken for near on an hour, so you think I probably do, but there's a lot of doing to be done to make a successful business, and we want to be working with those types of people because we want to help them get more out of their business, and we want to do some of the doing for them and point them towards the right people that are going to be able to do that. So you don't have to do everything yourself, but the doing has to be done. So if this is you, let's have a chat, book a time to have a chat. I would love to find out where you are with your business, and we would more than happily catch up on the phone and find out what it is that you're struggling with and how we can potentially help you over the next little while. And I'd be very, very surprised if we couldn't do that. So like I say, grab a time to have a chat. Let's discover what the next 12 months looks like for you, and let's get on to building a business that you enjoy running and have some fun while you're doing it. Thanks for tuning in.